Well, to talk all things inflation, I'm joined by Matt Maley. He's Chief Market Strategist at financial services company Maley, Tabak & Co. Good to see you again, Matt. So when we're coming to this surprise drop in inflation, is it good news or is there more to it?
Well, it's certainly good news, especially with the thought that the trade war is not as bad as it was, because people really think that, even if the inflation number wasn't too bad this month, it'll be much worse going forward. Well, maybe it won't be quite so bad. The problem, though, of course, is that we have a situation where the economy was slowing even before before this tariff issue became a problem. And number one, and number two, everybody has been pricing in that the Fed would be much more aggressive this year in cutting interest rates. And even though, again, this number is a little bit lower, I think that most people realize that it's still well above that 2% target level. So they're not going to be getting aggressive anytime soon. So when you have an expensive stock market like we have today, we have to be worried about assuming that, or extrapolating out, the rally that we've seen over the last 4 or 5 weeks into the future.
Well, you mentioned the fears of recession there, and we had GDP numbers out too, didn't we, showing that had shrunk in the first quarter for the first time since 2022. Where are those fears of recession today?
Well, they've certainly been eased by the deals that have been made by the U.S. with both the UK and with China, and more since supposedly coming down the road. So that's eased. But again, my concern about what's going on in the stock market is that it's trading now. It's back to 22 times 2025 earnings, and almost 22 times the next 12 months. This is basically back to where we were in January. So we need to see the economy not just avoid a recession. We need to see the economy to bounce back in a major way if the earnings forecasts are going to pick up enough to justify today's level in the stock market. I just question that that's really going to take place.
So the Fed has quite a lot to think about here, doesn't it? What do you think we're going to see happening to interest rates?
Well, it's interesting because, with this news, people have been assuming that the interest rates would automatically come down with the Fed looking to at least ease. But as we've moved through this year, and they've been pushing it out further and further and further, and of course after last week's announcement, they've gone out. There's now people aren't looking for a rate cut or another rate cut until September. Okay, we have the 10-year yield in the U.S. here has only been higher for 4 months out of the last 17 years. So they're high. I mean, they're not as high as they were in the 1970s during that stagflationary period, but they're still high, and that is something that creates headwinds for the economy. So I just worry that people are putting too much enthusiasm behind this deal and assuming that everything's going to just be fine from here on in.
I want to talk to you about tariffs. Of course, what news programme doesn't feature tariffs lately? But we've had some uncertainty surrounding them, let's say. There has, of course, been a deal with China with a 90-day mutual tariff cut. What kind of effect might that have? Will it soften the expected economic blow?
Yeah, it certainly has, and but the question is how much uncertainty has it removed? I mean, that was one of the biggest things we had, not so much for the stock market, but for the economy. Business managers, they certainly feel a lot more comfortable about the situation now, but they still don't have the full clarity they need to really to act. I mean, let's face it; these tariffs are still more than they had before President Trump took office. Fairly significantly more, and so even though they're much lower than the most extreme levels that they were using just a month or two ago, they're still up there. And again, if the stock market was trading in the U.S. was trading at 16 times earnings, I'd be less concerned about it. But with it trading at 21 to 22 times earnings, it still creates some concerns in my mind.
Matt, great to talk to you as always. Thank you for coming on the programme. That's Matt Maley from Maley, Tabak & Co.